Do you know about the new adjusted inflation income tax bracket for returns filing in 2025? Today, we're diving into this intriguing topic. The Internal Revenue Service, better known as the IRS, has rolled out a new adjusted inflation income tax bracket. But what exactly does this mean? Essentially, it's a system where the income tax brackets are adjusted based on inflation. This approach is designed to counteract the effects of inflation on taxpayers' real income. As prices rise, so does the cost of living, meaning that without adjustment, taxpayers could find themselves in higher tax brackets without a real increase in their purchasing power. This new tax bracket is set to come into effect for the tax year 2025, meaning it will impact the taxes filed in 2026. It's crucial for taxpayers to understand these changes and how they might affect their tax situation. So, why has the IRS implemented this new system? The goal is to ensure that the tax system remains fair and equitable, even as inflation impacts the economy. By adjusting tax brackets for inflation, the IRS aims to prevent bracket creep, a scenario where taxpayers are pushed into higher tax brackets due to inflation, rather than an increase in real income. Stay tuned to unravel the details about this new tax bracket. Dive into the specifics of the new adjusted inflation income tax bracket. If you're familiar with the tax system, you know that it's organized into brackets. Each bracket corresponds to a specific income range and tax rate. The new adjusted inflation income tax bracket for the tax year 2025 maintains this structure but presents some crucial changes. First, let's talk about the inflation adjustment. The IRS adjusts the tax brackets annually to account for inflation, a process known as indexing. It's designed to prevent bracket creep, a situation where taxpayers are pushed into higher tax brackets or have reduced value from credits or deductions due to inflation, rather than an increase in real income. The new brackets are adjusted based on the inflation rate, which is measured by the Consumer Price Index. So, if the inflation rate increases, so does the income range for each tax bracket. The goal here is to ensure that you're taxed fairly according to your purchasing power, not just your income. Now let's discuss the brackets themselves. Each bracket represents a portion of your taxable income and corresponds to a particular tax rate. For instance, if you fall into the 10% bracket, you don't pay 10% on all of your income, only the income within the 10% bracket's range. The new adjusted brackets expand these income ranges. For example, the income range for the 10% bracket has increased, meaning more of your income could potentially be taxed at this lower rate. The same applies to each subsequent bracket. These changes could have several implications for taxpayers. For starters, you may find yourself in a lower bracket than before, or you may discover that more of your income falls into a lower bracket. This could result in a decrease in your overall tax liability, which is always a welcome change. However, it's also vital to note that these changes are based on inflation, not a decrease in tax rates. So while the bracket adjustment might lessen the impact of inflation on your taxes, it doesn't necessarily mean you're paying less in taxes. Remember, understanding these changes is crucial for your tax planning. Now, let's recap the key points about the new adjusted inflation income tax bracket. First off, remember that these changes are designed to account for inflation, which can greatly affect your tax obligations. This means that the dollar amounts for each income tax bracket have been adjusted upward to keep pace with inflation. Secondly, it's crucial to understand that these adjustments do not alter your tax rate. They simply change the income thresholds for each tax bracket, allowing for more income to be taxed at lower rates. Thirdly, be aware that these changes will apply to the tax returns you'll be filing in the 2025 tax year. So, it's essential to start planning now to avoid any surprises. Lastly, don't forget that these adjustments are applicable to all types of taxpayers: single, married, filing jointly, and head of household. Each category will see changes to their respective tax brackets. Remember, navigating the complexities of tax laws can be challenging. If you have any questions or concerns about these changes, it's always best to consult with a tax professional who can provide personalized advice based on your individual circumstances. Keep these points in mind as you plan for the 2025 tax year.